It's becoming more common for dealers to sell new vehicles to a buyer that is financing the purchase with an auto loan that includes a monthly payment of more than $1,000.
Whether you've seen it or not, Americans borrow more money on their cars than ever. More and more people in the U.S. can afford to acquire new cars as our country develops and wealth is dispersed more evenly. But is that the sole explanation for why U.S. auto loan debt consistently seems to be increasing? According to the most recent quarterly report on household debt and credit from the Federal Reserve Bank of New York, Americans owe $1.52 trillion in vehicle loans. At $25,000 per, that's enough to purchase 60 million Toyota Camrys. For a brand new car, the typical monthly payment in the US is $575. In the United States, the average monthly car cost for a used car is $430. The average amount borrowed by Americans for new cars is $34,635. Auto loan debt has increased nearly every quarter since 2010 and is now nearly twice as high as it was just 10 years ago. According to credit agency TransUnion, the average vehicle borrower had an outstanding balance of $29,169 in the third quarter of 2022. However, it's not just the monthly payment that puts a strain on our finances. You still need to secure the greatest car insurance policy you can, and as you drive the new car off the lot, its value drops by 20% or more. For individuals who choose to take out larger, lengthier loans to finance vehicles, car debt is piling up. As a result of rising new and used automobile prices and interest rates from a year ago, customer payments have increased. Some are now over $1,000 per month. As a result, more and more people are in over their heads with their cars, owing more than they're worth. Are you planning to buy a car with the help of loans? Then you should know about the existing problems that are putting Americans in a financial crisis right now. People are exchanging their vehicles and refinancing up to $10,000 of negative equity into new auto loans to relieve some of the pressure caused by excessive car payments. Due to the opportunity to benefit from financing and credit products like Gap Insurance, many dealers are happy to accommodate these customers. The probability of consumer credit default is rising, according to industry analysts, even if there's no recession this year. Before all this, do you know how car loans work? Let's have a look. A particular kind of installment loan used by an automobile is called a car loan. A legally binding contract between you and the lender states that they will lend you the money to purchase a car and that, in exchange, you will pay back the entire loan amount as well as any interest by a certain deadline. Depending on the lender, they often have durations of 24 to 84 months for repayment. The car and your financial status will determine how much you can borrow. Your auto loan payments will be applied to both your principal loan balance and the interest the lender will be charging. Depending on the interest rate you're eligible for, your overall interest costs will change. Your rate will often be better the higher your credit score. For borrowers who choose shorter payback terms, many lenders also provide cheaper rates. One of the reasons behind this is the increasing length of the typical loan term, which is the reason why U.S. auto debt is rising. People are borrowing money for 6 and 7 years more frequently now to pay for new cars. Nowadays, cars are becoming an efficient automobile for our daily life, but the issue that individuals today have is the rise in car prices. In the last few years, new car prices have also increased. The average cost of new cars will have an impact on how much debt Americans are ready to take on. Expect the total loan amount to increase as Americans continue to buy new cars as new car costs start to rise. People are more likely to increase the loan's term due to increased auto costs in order to maintain affordable monthly payments. The fact that the number of new automobiles has been constantly increasing up until recently gives the impression that the economy is doing well generally. But do you think SUVs and trucks rather than automobiles have been driving this demand for new vehicles in the US? People want to purchase bigger vehicles for their families because petrol prices are so low and the economy is currently thriving. In turn, when more new automobiles are bought and sold, there will be an increase in overall automotive debt as well as the total amount owed on auto loans. Banks will begin to take on additional fees to customers' monthly payments if they begin to fall behind on their car payments. These folks will begin experiencing an increasing number of difficulties making their car payments on time each month as these additional fees begin to mount up into higher sums. After several months, if this person still hasn't paid their automobile payment, the lender usually has the option of taking back the car and selling it to recover their losses. Even when certain dealerships' predatory lending practices have come to light, determining whether a loan applicant is making a wise financial choice still rests on them. So including extra prices is something that impacts on the increase of debt. Don't you think this will make things worse when it comes to financial issues? Overall, Americans are building up more debt, which appears to be a common problem in the US. With their housing and automobile purchases, people overextend themselves, and they then wonder why they have no money left over at the end of the month to pay the remainder of their bills. Younger individuals are increasingly struggling with student loan debt. The problem of the US accumulating more auto loan debt is being made worse by the fact that an increasing number of Americans are living paycheck to paycheck. People are unlikely to have any extra funds to save up for buying a new car if they don't have enough left over to pay for groceries. When buying a second car, people's loan amounts will be higher the less cash they have on hand. Due to this and the escalating prices of both new and used cars, Americans are having problems getting auto loans. Another factor that causes the increase in the debt of car loans is that people want to experience the new cars as soon as possible without thinking about their financial status and the impacts that will affect the individual after making such decisions. It makes sense to get a new vehicle if the faults with your current automobile will cost more to fix than the car is worth. But does it make sense to buy a new model year car just because it's available? Comment down your thoughts. Among these issues, another problem that exists as a reason for the increase in debt is that the new features that are introduced in cars attract people. The cost of cars as a whole is rising as a result of new automotive technologies, which also increases the amount of debt that US customers incur to finance their vehicles. This implies that because of all of the new technology that is installed on the vehicle, the loan amount that you will normally have to finance will be higher when you go to buy a new car. Only a handful of the new technologies being introduced right now include autonomous driving, lane keeping assistance, and auto braking technology. The cost of the vehicle as a whole and often the auto loan will rise as new cars continue to incorporate more technology. In general, having new technology in cars is a wonderful thing, but it is also one of the causes of the surge in American auto loan debt. In fact, countless lawsuits and complaints alleging discriminatory and unlawful auto loan practices have been made by American automobile buyers against numerous lenders across the country. What is going on with vehicle loans, and how can consumers safeguard themselves? And what precautions will you take in order to prevent all these? Comment your thoughts on this. And that's all. Thank you for watching the video. If this video has helped you, please give a thumbs up and subscribe to our channel. And don't forget to click on the bell icon to not miss out on any video and to get notifications on time. Don't hesitate to give your suggestions for our videos. See you in the next video.